Hi there, Serial Trader here. I want to look at a nice setup forming on the markets here. But first I want to look back at the 2016 chart of SPX leading up to the election for that year. And I think it has some important similarities. And I think the outcome as far as the market action goes will have some similarities as well. So let's get right to it. Now, in 2016, we made an all-time high at the time on the 15th of August, and then we spent the remainder from that 15th of August basically to our election period. Looks like November 4th was the intraday bottom here in 2016. So 15th of August to November 4th was the length of this corrective move, and then it was just off to the races as soon as Trump was elected. And if you'll remember, a lot of commentary at the time was saying, oh, if Trump gets elected, the market's absolutely going to crash. And interestingly, overnight, as the results were coming in, the futures did actually start crashing, but they had a very strong reversal over the, during the overnight session, and went from crashing to being extremely bullish. And then, of course, the very next day, by the time the cash markets opened, there was no crash. Quite the contrary, things were just shooting up off to the races. And we know how strong the market was for quite a period of time after that. Made several new highs for quite some time after that. Anyway, the actual pattern that went into that, so from this 15th of August 2016, we had a nice little ABC down for W. Then it looks like an ABCDE triangle X. I remember looking at this back then. So we had a WX, and then an ABC down for a Y, so a more complex pattern, a WXY. And then, of course, we had the big reversal after the election was settled. So I think we're looking at a similar setup here, sentiment-wise and pattern-wise. Not identical. It's a different corrective pattern, but it's a corrective pattern nonetheless over here in 2020. And just to, before I go in a little closer, let's look at our overall move off the March lows here. So nice 1, 2, 3, 4, 5, probably for a larger one. And so far, we peaked in on the 3rd of September. So you remember in 2016, we peaked in mid-August. In this case, we peaked early September. Not a huge difference there time-wise, a couple weeks or so. Anyway, from our 3rd of September, 2nd of September peak, looks like we have an ABC down for a larger A, ABC up for a larger B to a lower high, and looks like we're forming a 1, 2, 3, 4, 5 down probably for C of a larger 2, and this would be a flat pattern. And the B wave didn't go quite as high as you typically want to see in a flat, although I do think it got beyond the 80% retracement, which I would consider kind of the minimal level to be able to consider a B wave of a flat. And let me just double check. I believe I already looked at this before, but just to double check here. Okay, put in our 0.8. Hang on. Oh, that's the wrong one we're on there. Okay, I got that sorted out. Okay, now, so here's the 80% retracement, and actually I think we just about got to that 90% retracement. So 35, 50, 24 was a 90% retracement of that A wave. And we got to 35, 49, 85. So that's basically a 90% retracement. So certainly qualifies for a B wave of a flat. And then, of course, you got 3 down for A, 3 up for B in a flat, and then you're looking for 5 down in C. Looks like we're well into that. Now, we could have a low in place here. You don't necessarily get these perfect subdivisions, especially if you look at the futures. You can kind of get 5 down out of that, although it's not pretty. But the main point is here we're looking for a low, and then obviously a big reversal and a new trending move up to significantly higher highs. And right here I just have the AC equality relationship, and that would come in at 31.71.19. It would also be right near the bottom of this corrective channel that I've drawn here. And if I just go in a little closer here, this is what we're looking at. So very similar setup, not obviously not identical, but a similar idea. Kind of peaked in the well, in this case it wasn't the August period, but early September, within 2 weeks of the same time that we peaked in 2016. within 2 weeks or so. And now we've been in this corrective pattern leading up to what looks like well, we either potentially have a bottom in already, it's possible, or within the next couple sessions, early next week, certainly looking for a bottom. And again, the same kind of narratives are coming out. Well, remember in 2016, okay, if Trump doesn't get elected, or sorry, if Trump gets elected, the market's going to crash. Now the narrative, well, if Trump isn't reelected, the market's going to crash. So it's pretty funny how that narrative can change so drastically. And now if Biden gets elected, well, depends who you listen to. Now some are saying if Biden gets elected, the market's going to crash. Or if Biden doesn't get elected, the market's going to crash. I mean, listen, it doesn't really matter who gets elected. What matters is the thing gets, it's put in the rearview mirror. The market can move on to whatever else it wants to, focus on and get back to going up, which it has typically been doing, certainly for a lot of this year and many other years. But yeah, forget about all that nonsense. The point is here we have a nice corrective pattern. Overall trend is up. We have a correction of that larger trend, and looking for a bottom either in place, as of now or soon, and looking obviously to catch a significant ride up on our next trending move. So that's really what I wanted to highlight here. And what I do want to go to here is the Dow Jones Industrial Average, because it's actually done the cleanest pattern of all the indices so far. And okay, they're all basically the same. I mean, they vary in their magnitude, but as far as the overall pattern, the Dow is the same as the S&P. We got from the March low 1, 2, 3, 4, 5 up, probably for a larger one. Now we have ABC down. Now this actually looks like it could very well be the lows are in place here for the Dow, which kind of makes me think maybe the lows are in place for everything else too, even though they haven't quite done a perfect pattern completion. We've seen that already earlier this year. I'll get to that in a bit. But, I mean, if I go in closer here, just bear with me, go a little closer here on the Dow. So from that September, now it looks like the Dow actually peaked on September 3rd, not September 2nd, but you're splitting hairs there. So ABC down for A, ABC up for B, and then looks like we've potentially already done our 5 waves down for C. Here is our AC equality relationship. You see, if I go to the candles, you see there's been a couple lower shadows that have violated the channel and also that equality relationship, but certainly they are shadows. We're not closing there. So that looks like a pretty decent potential a low being kind of hammered out there. And actually we did a bullish hammer candlestick today on the Dow. So that's looking quite mature, potentially ABC down done for this flat pattern for the Dow. And that kind of makes me think that potentially the other indices have bottomed already. I mean, obviously we need a little more confirmation to confirm that. We can always get a little bit of a spill down here, a little extension in the C wave just to kind of scare everyone off. And then you get the reversal. Seen that plenty of times before. But certainly the Dow, I'd say you can reasonably count this as complete, pending a little confirmation. So I did want to show that. Now what else? Okay, now we'll go back to that SPX chart. I mean, I could go the futures and we could look at that and probably get a little bit more detail since there's some gaps in here and stuff. But the bottom line is we're working a 3-wave move down, nearing completion. And, it looks like an excellent position in the market here to start putting some longs on, and then maybe add upon, the reversal and some confirmation, add to those longs, try and build it, average into a position, because we are poised or set up for, significant move up after this pattern completes. So that's really the bottom line of this video and the reason I'm doing it. Again, I'm not providing constant market commentary because I don't see the point, but when I see a real good high confidence setup coming to fruition, that's something I do want to share while the opportunity is still available. I don't want to come in after the fact, after we already get this something like that, and say, oh, here, yeah, the market's bullish, you should buy here. I mean, yeah, you could probably still buy up here and have it keep going, but I'd like, best case scenario, get in closer to the lows than wait for so much confirmation before doing something about it, right? Especially when the pattern and the setup and the timing with the election, everything's kind of coming to a head here, just setting up nicely, very much mirroring that 2016 setup, which I think is significant, Okay, well, that's probably all I wanted to go through there as far as the wave charts here. Here, we'll go to the Thinkorswim Candlestick Charts because there are some things to point out there. So potentially a little reversal candle today. We certainly bounced off the lows near the close there quite nicely, although not enough to convince me, at least convince me with a high degree of confidence that the low of this pattern is in place. Again, typically in these ABC patterns, the C wave does make a new low, even if it's just marginally below the A wave. Although, again, we've seen this. Actually, you know what? That reminds me. I'll just go back real quick here, and we'll look at the SPX chart. And I'll just remind you, in the past here, here's a good example where we had this ABC pattern, and that was from the June high, actually. And then we came into our, what actually would end up being the June low, but it should have been, oh no, that's still in June. Yeah, so from the June high to the June low, this is what I'm speaking about, where we had the A down, depends where you put your B, but whatever, ABC down, and let me just drop the degree on that label there. Okay, so, and I remember at the time looking for the C wave to at least get below the A wave, and it just couldn't do it, right? You had A down, B up, and then you had a truncated C. So it was just too bullish to even go and complete the pattern properly. So a truncated C, that was certainly the sign of overall, pressure to the upside, and that certainly happened afterwards. You had that huge wave 5 up into our September high. Basically just all summer, you just went, beastly to the upside. Now, could we get the same idea here? And let's get to the present time again. Same idea here where, yeah, we should get a new low in the C wave, but we just don't on SPX. We already did on the Dow because the Dow's a little bit of a, I don't know if you want to call it weaker or maybe just more normal as far as its behavior, at least in this case. But do we get it where we just have that truncated C in SPX? Certainly possible. So by not taking any action yet and just relying that you're going to get a new low in C and waiting for that, and then having it start to bounce and oh wait, I missed it. I mean, it's a good idea to at least put a feeler size position in here with the intention to average down or average up, depending what happens here, right? Because that truncated C back in June, I'll tell you right now, that one got away from me, and I regret it. I could have made a lot more money, had I at least started initiating a long position. And in this case, I don't want to make the same mistake here. So I am personally starting to build a long ES futures position. Certainly not heavy. I do plan on adding to it. Whether I add while it's going up or add while it's going down, or a little bit of both, but that's my take on it. Anyway, just so I point that out. Now back to the Thinkorswim chart. So yeah, potentially a little bit of a reversal candlestick. Nothing high confidence. That's really all I want to mention. We are oversold on the oscillator, daily oscillator. Now on the Dow Jones Industrial Average, already gone through that. But again, we had a nice ACA quality relationship met today. Also the bottom of this corrective price channel. And we do have a potential bullish reversal hammer daily candle on the Dow today. So that's interesting. Potential bottom formation there. And on the NASDAQ composite, now again, with the NASDAQ, this is the least likely. So we got A down, so ABC for A, ABC for B. So we're trying to get that 5 down for C. And normally, again, you'd make at least a double bottom or a new low. But I think the NASDAQ has the least chance behind SPX, of course, of making that actual new low. And I think good chance we get the truncated C, and then we just go off to the races again. Now, it's possible we get a little weaker here in the next session or two before the election sorted out there, I believe on Tuesday evening. So it's possible Monday, Tuesday, we go a little deeper. Maybe we do actually make a new low like we're supposed to in the C wave on SPX and the NASDAQ, but I wouldn't hold your breath on that. Consider it, an entry gift for going long if it does happen. The Dow's already made its new low and done a little reversal candle. So I think it's possible the low's already in place, but again, not enough confirmation to say that confidently. But I'm just saying, don't be surprised if you get a truncation on the C wave for SPX and the NASDAQ. We've already seen that earlier, and I think it certainly caused me to miss out on some opportunity. And I'm going to try very hard to not let that happen again here in this case. Especially with such a nice catalyst, a defined catalyst like the election. I mean, you can guarantee there's so many market participants just on the sidelines waiting for that to kind of clear up before they jump back in. And that's probably the psychology behind this drift down. I mean, I know there's all this headlines about COVID and blah, blah, blah. Guess what? COVID was absolutely raging in the springtime, and the market was going straight up, ridiculously up, almost uninterrupted for a while there. So don't get suckered into those headlines and, the so-called news affecting the market. This is all just about positioning and, the pattern playing out as it always does. Okay, that's, not much to say on the NASDAQ. This candle, pretty weak. Again, viewed as a gift to build a long position on any weakness early next week. That's how I'm looking at this. Now on the VIX. So VIX, we had a nice spike up in VIX, and now we're actually having some pretty strong rejections of VIX. And that typically has marked other market peaks, of course. Whenever you get a VIX spike, once the VIX starts dripping back down, that means the market's starting to trend back up. There's quite a relationship there. But I want to do the VIX VVIX tool there. Now on the VIX VVIX tool, I am seeing some other signs of a potential bottoming process. So right now we have the VIX and the VVIX. So they made their highs over here, even though the market made lower lows over here. So that's a divergence, the one you look for at a turning point. So we're making lower highs on the VIX, lower highs on VVIX, but we still made lower lows on SPX. So that is step one of the buy signal. You want to see some divergence there. Next step would be getting back below the red moving average on VVIX. We're not quite there yet. Perhaps early next week that'll happen. And then, of course, the final step to get the confirmed buy signal is get SPX back above the blue moving average, which is currently, now it's a moving target, but currently it's sitting at 33, 31, 35. So maybe 50, 60 points above current levels, although this moving average will come down just as time progresses, even if the price didn't change. But yeah, currently 50, 60 points above current levels there in SPX. So that's what we're looking for. So we got the early ingredients of a buy signal. We do have that divergence that I pointed out. Next, we need to get the moving average crossovers on VVIX and SPX. Not there yet, but certainly you can see it setting up for that, along with the other analysis. It's starting to look good there. Okay, well, that's really all I wanted to go through. I guess you can digest that over the weekend here. Probably come up with a plan for next week and looking to get long. And, this isn't just a day trade where, oh yeah, we're going to get long and have a nice little bounce up for a few days or something, or a few hours, if it really is an intraday trade. That's not what this is about. This is about getting in at a good price level, good location on the chart, and getting a move that could potentially last weeks or months, etc., and riding that for all it's worth. That's really what the objective here is. That's what I'm trying to point out as a potential opportunity forming here. And there's lots of individual stock charts that have their own unique setups that are looking quite attractive as well. But you can certainly see it here in the indices forming. I'll leave that with you over the weekend. Certainly, if you have any comments or questions, hit up the comment section there. I love having back and forth discussion. Anything you want cleared up, or if you have any requests, something you want me to look at that you think is timely, just let me know. All right, Serial Trader signing off.